9:30, so we'll make a start. Obviously, this is our first meeting where we've all met online. We've had the hybrid version in the past, but this is the first meeting where we're all online because of the office move. If I can ask you as normal, if you want to speak, if you can use the raise hand icon at the top of your screen, that would help. I'll get Brian to keep me right as well, just in case I miss any of you who are wanting to speak. And as he said already, if you can ensure that you're on mute during the debate, that would help as well, and put your phones on silent if possible, or switch them off. Okay, we'll move on to the agenda. Brian, we got any apologies or substitutions this morning?
We've got two apologies, convener from Provost Bissett from Falkirk and Deputy Provost Balfour from Falkirk Council. Okay, thanks for that, Brian. Takes us on to declarations of interest. Does any member have a declaration at this point? I don't see anybody indicating anything. Okay, move on to the minute of the meeting, which was held on the 3rd of March 2023. Can we agree that the accuracy of the minute? Take it that's agreed.
Agreed.
Yep, thanks for that. Any questions in relation to the minute? No, again, I don't see anybody indicating anything. Takes us on to item 4, the revenue budget for 2022-23, review as at 31st of March 23. Elizabeth, I believe you're taking us through this.
Sorry, it's myself this morning, so Elizabeth's
right,
sent
sorry,
her apologies.
Lindsay. Okay.
Thank you. Good morning. So this report provides the board with the draft financial position for the year ending 31st of March 2023. The report shows an underspend against budget of 231,000 for the year, which is a favourable movement of 12,000 since the December forecast was previously reported to the board at the last meeting. Table A within the report provides the detailed variances that make up the 231,000 underspend noted above. The majority of this underspend relates to employee costs, which amount to 225,000. This is mainly as a result of vacancies due to recruitment challenges throughout the year. The remaining small balance of 6,000 is a net underspend within supplies and services and is detailed within the table. Table B of the report provides details of the 12,000 favourable movement since last reported to the board in March. An update on the closing reserves position is included in the draft annual accounts paper, which is the next agenda item. I'm happy to take any questions on the paper. Thanks.
Thanks for that, Lindsay. I'll open it up to members. Any questions for Lindsay on this paper?
Just a quick one.
Oh, okay.
Lindsay, the underspend on staff, is that because of we haven't recruited more staff which we need, or is that across the board?
Lindsay, can you pick that up?
Apologies, I didn't quite hear. Is it due?
I'll do that again, Lindsay. The savings on staff costs, is that due to the fact that we are short of staff? Or is it some sort of saving across the board?
I'll let Pete come in. He can answer it a bit more succinctly than myself.
It's actually that recruitment has been difficult. We've had a high staff churn during the last financial year, and so you get gaps between people leaving and people starting. We haven't always been able to recruit qualified staff to qualified posts, so you will have a trainee valuer in a valuer post, and therefore there's a budget saving there. We reckon we need a qualified staff, but we can't always recruit qualified staff. We're currently running with 2 vacancies, which is the lowest we've had for a considerable time, certainly over the last 12 months. And at the moment, we've just got a slight pause on recruitment because of the office move. We're actually advertising for a field officer today, and the advert should go out sometime next week. So we're beginning to get back into trying to fill the remaining 2 vacancies. But it's been unprecedented staff churn in the last year.
Thanks very much. Thanks for the explanation there, Peter. Martha, you did have your hand up. Do you still want to come in? And then we'll go to Jim.
Yes. Well, actually, it was
it was asked and answered, so it's fine. I'm pleased to hear of though that it's only 2 vacancies that are left now, because I know there was quite a lot of things moving about. So pleased to hear you're getting there. Thanks.
Thanks, Martha. Jim, you're next.
Yes, good morning. Thank you. I'm just wondering, Peter, is there any particular reason that we're finding it difficult to recruit? Is it a monetary factor?
It's a combination. Money is one factor in that. Private sector firms can offer more money for chartered surveyors. There is also a shortage of qualified chartered surveyors in rating work in Scotland at the moment because of the move to 3-yearly revaluations. All offices across Scotland have expanded their establishment, and therefore all are trying to recruit and train up chartered surveyors. And also there's been a large number of retirals at assessor level and deputy assessor level. So if you can imagine, staff have moved from being third tier to second tier to first tier. So there's been a shuffling around. That process seems to have stopped. But we're very much focusing on training and developing our own staff. And I think that is the way forward, in the hope that we can grow our own, in effect, because there is this shortage. I don't think we can probably compete with the private sector. You know, one of our colleagues left, the salary they got more, but they had no management responsibility. Within the public sector on the whole, to get more responsibility, you tend to have to take on managerial roles as well.
Thank you, Peter. Thank you, Chair.
Okay, thanks for that, Jim. I don't see any other indications to speak. Can we agree the report? Okay, thanks for that. That takes us on to the draft annual accounts for 2022-23. Lindsay, you taking this one as well? Lindsay seems to be frozen on my screen here.
I think she is, convener.
Yeah.
Can we maybe just park that and come back to it then, Brian?
That might be an idea. I'll try and contact Lindsay.
Right, do we have somebody here from the auditors at the moment?
We have Fadhill. Don't know whether he can actually take us through.
Yep. Hello. Hi. I'm Fadil from Deloitte, the external auditor. So let me just take through you the audit plan for the VJB audit. Yep. So I'm not going to go through the whole deck of slides. So just going to focus on the key areas. So if you look at our slide 6, that's where we explain our audit and the different responsibilities of management and the board. And then if you look at slide 7, okay, that's where we also mentioned about the audit plan. So here we will talk about the neutrality. So we have actually set neutrality based on the gross expenditure, on the forecasted gross expenditure. So based on that, we have set that at about 58,000. And we will also report any misstatements that's above £2,900. So I would also to highlight that we are all independent. The members of the team are all independent of the VJB as well. If you look at slide 8, that is actually our planned timing of the audit. So currently we are doing the audit plan. Field work is expected to commence by 10th July and probably complete by the end of July. And we will be expecting to sign off the accounts by the end of September. So again, if you look at slide 9, that's where we explain the basis of our neutrality. So we have actually used 2% of the forecast gross expenditure again, to determine our neutrality. And then if you look at slide 10, that's where our scope of work and approach has been explained, as well as the timelines that I've already mentioned previously as well. And then if we move to slide 12, that's where there's a summary of our significant risks that we have identified as part of the planning for the audit. So the first risk, if you look at slide 13, we talk about the management override of controls. So as part of our testing, we will be considering the overall control environment and tone at the top. We will also test the design and implementation of controls relating to your journal entries and accounting estimates. We will make inquiries of individuals involved in the financial reporting process, And we will also test whether the journals and adjustments are appropriately made in the preparation of the annual reports. And of course, we also obtain an understanding of the business rationale of the significant transactions that we become aware if it's outside of the normal course of business for the entity. Otherwise, if there's none, then that's fine. And if we move on to the next slide, slide 14, we talk about the second significant risk that we have identified, which is relating to completeness of the non-payroll expenditure. So from here, we understand that a large proportion of VJB's expenditure is actually payroll, which is well forecasted and agreed to the underlying payroll system. So we are only identifying non-payroll expenditure as the significant risk. In terms of our procedures, we will evaluate the design and implementation of the controls surrounding this, which looks at the accruals and prepayments made at year end. We will also focus on the sample of the non-payroll accruals and prepayments made at year end, and also perform a cut-off testing of the invoices received and paid around the year end. If you look at slide 15, we also talk about other areas of audit focus, which in this case, we look at the pension liability. So in this area, we will look and assess the independence and expertise of the actuary supporting the basis of reliance upon this particular work. And I believe Hymans Robertson LLP is the appointed actuary. So we review and challenge the assumptions made by Hymans Robertson LLP, and of course, review this disclosures within accounts against this particular code. And then if we look at slide 16, we also look at some wider scope requirements for this audit. And if we move to slide 17, we have also assessed that the VJB is actually a less complex body. So we are only going to be looking at the financial sustainability area. So this is based on a number of factors, which includes pressures on expenditure, including public sector pay costs and inflationary pressures not being met by increased income that will result in anticipated funding gap of about 0.8 million pounds by 2026, 2027, assuming there's no Barclay funding that's provided in the 2025, 26 and 2026, 2027 budget years. So it was also recommended by the prior auditors that the VGB develop an overarching longer-term financial strategy for the next 5 to 10 years to identify problems with affordability at this stage. So as part of our procedures, we will assess the development of the budget and the medium-term financial plan, and also then specifically follow up on the recommendation made in the previous year's audit report to assess if VGB has incorporated a longer-term strategy of 5 years in its budget strategy. Other areas of the wider scope requirements and on slide 18, we also look at cybersecurity, fraud returns, and anti-money laundering. So I think that's all for me to highlight as part of the audit plan. But if the members of the board have any questions, do feel free to ask.
Okay, thanks very much for that, Mohammed. I've got a couple of questions for you just to kick things off. This is obviously just the start of the 5-year contract with yourselves.
Yep.
And I believe that there's already been a reduction of £6,000 in relation to fees.
Yes.
I just wonder if there's scope for any further reductions in the future.
That is something that will be possibly discussed with Audit Scotland, but most of our audit fees have been agreed and proposed and allocated by Audit Scotland. And I think our fees have been reduced to 2,000. If you look at the slide 37, 2,828, mainly because the fact that this is considered a less complex body. Yeah, so we believe this is already considered quite a reasonable amount for the scope and the level of complexity for this particular audit.
Okay, thanks for that. My second question is in relation to the pension liability. It's on page 106 of our papers. There's been a reduction of nearly £3.5 million between 2021 and 21-22. I'm just wondering, what is the reason for this reduction? It seems quite a large reduction.
Yeah, I believe the decrease, as explained, there's a decrease in the fair value of the assets and decrease in the liabilities of the demographic changes and financial assumptions. So we can definitely look into more of the assumptions used by the actuary as part of our final audit to really look at what really caused the significant decrease in the net pension liability, but they'll be taken up as part of our final audit field work as well.
Okay, thanks, Mohammed. I'll leave it open to other members if they have any questions. Nope, I don't see anybody indicating. Well, thanks very much, Mohammed. Thanks for your report and your explanation surrounding that. Can we agree the report? Yep, thanks for that. Okay.
Thank you.
If we could go back to item 5, Lindsay, are you back with us?
I hope so. I seem to be speaking, but nobody could hear me. Apologies for that.
You seem to have been frozen on the screen. That was the problem. We'll go back to item 5 for the draft annual accounts for 22-23.
Thank you. So the board has a statutory obligation to prepare a statement of accounts on an annual basis and have these audited by an external auditor. The audited accounts must then be approved by the board by the 30th of September. In line with this, the report asked the board to approve the 22-23 draft annual accounts for submission to the external auditor to carry out the audit. The details of the audit are set out in the audit planning report, which we've just heard an explanation from Mohammed. As reported in the draft outturn report, the board is reporting an in-year underspend, and this contributes to the overall surplus of 646,000 that is held by the board at the 31st of March 2023. Of this, 536,000 is earmarked for future commitments, which leaves an uncommitted balance of 110,000. This uncommitted balance equates to 3.7% of budgeted expenditure and falls within the previous target of between 3 and 6%, which was set by the board in its budget report for 23-24 in March 23. Overall, the draft annual accounts present a favourable outturn for the board, and I'm pleased to present them for this approval. Happy to take any questions.
Thanks, Lindsay. Thanks for the report. And it's good to see that our reserves are still within the required limit. Open it up to members for any questions or comments. No, again, there's no hands up. Can we agree the report?
Agreed.
Okay, thanks for that. That takes us on to item 7, the internal audit annual assurance report for 2022-23. Isabel, I think it's yourself that's taking this one.
Yeah. Good morning, everybody.
Morning.
The purpose of this report is to summarise the work we have undertaken over the course of the last year and to provide an overall opinion on the arrangements for risk management, governance and control based on that work. The report also comments on our compliance with public sector internal audit standards. As you can see from section 2, I asked the board to note that sufficient internal audit work was undertaken to support a balanced assurance and that internal audit can provide substantial assurance on the arrangements for risk management, governance and control for the year to 31st March 23. Section 3 of the report highlights the work undertaken in providing the overall assurance, and there's more detail on that in the pink paper that we'll hear at the end to go into the specifics of the reviews. Section 4 of the report comments on internal audit's compliance with public sector internal audit standards. These set out the principles and practices that we must comply with, and every year we're required to undertake a self-assessment against those standards. This review was undertaken by myself during March 23. There's also a 5-yearly external assessment, which the section last underwent during 2018, and we were found to be compliant. A further external validation will be undertaken by the Scottish Local Authorities Chief Internal Auditors Group later in this year. This self-assessment has given reassurance that we operate in line with the standards and that there's not been any real or apparent impairment of independence or objectivity related to audit work. So in conclusion, internal audit undertook sufficient work during 22-23 to support a balanced and evidenced opinion that substantial assurance could be placed on the Valuation Joint Board's arrangements for risk management, governance and control. In providing this opinion, internal audit operated in compliance with the public sector internal audit standards with no impairments or restrictions to independence. Thank you. I'll try and answer any questions you might have.
Thanks, Isabel. Thanks for your report there, and it's good to see that we've got substantial assurance. It's quite reassuring. I'll open it up to members for any questions or comments. No, there's nothing coming forward. Can we agree the report?
Agreed.
Yeah, thanks for that. Thanks, Isabel. Takes us on to the internal audit plan 2023-24. Isabel, it's you again.
Thank you. So this has been developed in discussion with the assessor, and as you can see from paragraph 3.1, it comprises 3 separate reviews. The first one is the annual canvas. We're going to have a look at that. Secondly, we'll perform a high-level follow-up review of previous internal audit recommendations that are still to be implemented. And thirdly, a review of the conclusions reached by the assessor in completing the annual governance statement assurance questionnaire. The process for reporting on our work will be the same as in previous years, and that's summarised at paragraphs 4.1 to 4.3. If I could finish by asking the board to approve our internal audit plan for 23-24 as per the recommendation at paragraph 5.1. Thank you.
Thanks, Isabel. I have a question. I'm not sure if it's for yourself or maybe for Peter. How did we arrive at the 3 bullet points at 3.1?
Will I go first, Pete, and then you can come in on the specific. So we work together in terms of the work that has been done before, and part of that work that we did last year was around looking at a lot of the internal audit reports and following up on those recommendations. So it makes sense to, where those haven't been implemented, to continue that work on. And we will look again this year to make sure that a lot of these previous internal audit recommendations are being followed up. So that was an obvious one right away. We do the annual governance work every year because that just, it follows on every year. And the same kind of thing, if recommendations are made or there are areas highlighted that could be improved upon, for example, policies maybe need updated, again, it makes sense to be chasing up on that and just seeing where things are. So that was the other. And it was, the annual canvas was more around a discussion with Pete around what we could be looking to do in addition. So I think it's an area we haven't looked at before, and because of the wide breadth of the work that we do, we felt it was prudent to at least have a look at it at some point. So that's why it's there, but I'm sure Pete's got more to say.
Okay, thanks, Isabel. Peter?
I think Isabel's covered the first 2 points well in terms of the annual, excuse me, the annual governance audit, and also making sure that we follow up on previous audit recommendations. You'll see from the final paper that the breadth of internal audit over the last few years has been quite wide, and it's really trying to focus on an area that hasn't been looked at for some time. The annual canvas, the legislation changed in 2020. This is the 3rd canvas that we've delivered under the revised legislation. The revised legislation gives us more flexibility as to approach, and it'd be useful to have a critical friend look at those processes and think, are we making the best of the flexibility that the law allows us? Is there things that we could do, that we could try, that maybe could be more efficient, more effective? So it was an area that, as I said, hasn't been looked at for a while. The legislation's changed. We're on a 3rd canvas. It's an ideal opportunity to have somebody look at it and think, is there more we could be doing? Is it effective what we're doing?
Okay, thanks for the explanation there, Peter. I'll open it up to members for any questions or comments. Martha?
Yes, thanks. Just an observation, really. It's a great paper in the fact that there's no surprises. So people are working to the best of their ability to, by the time it gets to us, we're looking at it and saying, yeah, this is okay, everything's fine. And that's the way it should be. But sometimes in life that doesn't happen. But I'm really pleased that that's everything seems to be preempted, no surprises, which is really good. Just an observation. Thank you.
Thanks, Martha. Can we agree the report?
Agreed.
Okay, thanks for that. That takes us on to item 9, best value report for 2022-23. Anne, is it yourself that's taking this one?
That's great. Good morning, everyone. Agenda item 9 is the best value report for the board. The report covers the financial year 2023 and follows the same format as previous years. It focuses on key performance indicators, and the first one is for the valuation role. the key performance indicator for the valuation role is a measure of the length of time taken to action amendments to the role. The assessor's powers to alter the valuation role are set down in law. Recorded amendments include the addition of new entries, deletion of existing entries, and amendments of existing entries. In section 2.3, you will see the targets that were set for 2023 and the previous 2 years. And in section 2.4, you will see our performance achieved for the valuation role. The total number of entries as at 31st of March was 13,228, and the number of amended entries was 1,018. So you will see that in the targets achieved for 2023. The overall targets were set at the pre-pandemic levels. However, this year has seen the conclusion of the revaluation draft role on 30th of November 2022 and the final version published on 1st of April 2023. The target for changes in less than 3 months was not met and was missed by 15%. This represents 11% differential when compared to the previous financial year. The targets for changes in less than 6 months was missed by 1%, and the target for changes more than 6 months was missed by 16%. Moving on to the valuation list, the key performance indicator for council tax is a measure of how long it takes for a new house to enter the list. The number of entries in the list as at 31st of March 2023 was 149,457. This excludes domestic garages and stores that appear in the list but are exempt for council tax payment. In section 2.6, you'll see the target set for the 2022-23 year at 94% in less than 3 months, 3% in less than 6 months, and 3% in more than 6 months. And in 2.7, the performance we actually achieved, we achieved 90% in 3 months, 7% in 6 months, and 3% in more than 6 months. The total number of new dwellings added to the list decreased from 1,154 to 849, a decrease of 26% on last year's figures. The entry to the list is in 3 months was missed by 4% and reflects the focus of the valuation staff on delivering the revaluation 2023 this year. Moving on to our targets going forward for 23-24. The first ones in section 2.8 show the valuation role, and we have set our targets for the 2023 year at the same levels as the 2022-23 year. It's proposed that the targets are maintained. Achieving these targets would represent an increase of performance of 15% and 16% for the 3 and 6 months respectively. Moving on to the valuation list, again we have set the targets at the same level as the previous year. This is in line with the actual performance achieved in 2021-22 year, which was the most recent year not impacted by revaluation. The 2021-22 Best Value Report highlighted that delivery of the revaluation would likely significantly affect workloads. Additionally, the SAA agreement to increase the number of summary valuations at the portal, together with the legislative requirement to create a link to rented property list for specific subjects in the role, has provided additional work streams. This year has seen substantial system development ahead of the new proposals and appeals procedures coming into effect, together with the preparation for the transfer of appeals to the local taxation chamber of the First Tier Tribunal on 1st of April 2023. The significant number of COVID-19 appeals was noted in last year's report. Most of these appeals have been withdrawn, and the deadline for disposal for the remainder by the local taxation chamber of the First Tier Tribunal has been extended by the Valuation Timetable Scotland Amendment Order 2023 to 31st of December 2024. The COVID-19 pandemic has now passed, and survey of properties has recommenced to enable our statutory functions to be completed. Lessons learned in the pandemic have been incorporated into our processes, and effective ways of obtaining information electronically have remained valuable tools. The targets set last year reflected the impact of revaluation on workloads. The targets this year have been set having regard to a return to a more business as usual year and are in line with 2021. Assessors continue to prepare for 3-yearly revaluations from 2023 onwards. Assessors will have to deliver revaluations within a vastly reduced time frame whilst ensuring the valuation rule changes are applied. The amendment to legislation affecting self-catering property requiring evidence of 70 days of actual letting will generate a new work stream going forward. The assessor will require annually to assess self-catering properties to determine whether they should remain in the valuation rule and return to the council tax list. Section 3 outlines that the public performance report is published on the assessor's portal and it is available from our office, and section 4 is a summary, and 5 is it is recommended valuation joint board considers and comments on the continuing commitment to best value by the joint board, and I'm happy to take any questions on that.
Okay, thanks very much for your report there, and I just have the one question myself. You highlighted at 2.4 the reduction in the percentages. I think you maybe actually answered the question in your presentation there, but there was quite a drop in the percentages mentioned at 2.4. You went on to state that there was future targets set, which I think would probably bring these figures back up again. Is that what you're actually anticipating?
Yeah, as ever, we're hoping to meet the targets and exceed them, but we do have a number of unknowns coming forward this year. We have the new proposals and appeal system, which is evolving and is a completely new system, which needs problems ironed out. We also have, as I said, the self-catering units that we have to go through every one of almost 600 properties to make sure that they have provided evidence of letting, which is an additional work stream. And this is the beginning of the first 3-yearly revaluation cycle. So there's still quite a significant amount of unknowns and new changes coming forward. So as ever, we hope to maintain and exceed the targets, but there are some unknowns in there that we will work through as effectively and efficiently as possible.
Okay, thanks for that, Anne. Brian, you got a question or a comment?
Thanks very much. Yeah, you've kind of touched on it already, but what were the main reasons for 2.4 for the targets not being met? Have you got an idea?
Well, the main reason is every 5 years we complete the revaluation, and this was the year where the bulk of that work was done. And we've also, as Pete's already mentioned, we've had a significant amount of staff churn this year at key levels, and we've been working with that. So it's been a very challenging year meeting a revaluation, and also there's been 2 further changes as well in our communication on summary valuations at the portal, and also working towards the new proposals and appeals system. So it's been an exceptional year for us, and I think it was said in the last best value report that we anticipated this, but it was difficult to know where to place the stats, so we maintained them. But as we expected, it's been a very demanding year.
Thank you very much.
Okay, Peter, do you want to come in?
Yeah, really, I mean, Anne's covered it very effectively, but I just really wanted to add my voice to Anne's that 22-23 has been a particularly challenging year for the valuation service. Anne's alluded to the staff churn. There's been almost the 2 previous deputies moved on to promoted posts as assessors, and then Anne and Mark have joined the organisation. It's seen a significant change in management team and across the organisation, but also this move to 3-yearly revaluations, dealing with the pandemic. Add on to the top also the relocation project. I have to say this for me personally has been probably one of the most challenging years within my 10 years as assessor, and the most change I've seen within the assessor service in 30 odd years, and it shows no sign of letting up. So we're moving to 3 yearly revaluations. The assessors met on Thursday last week to review the project plan for the 2026 reval. We're almost straight into revaluation. We've got new proposals and appeal system coming on board. And in my capacity as SAA president, I attended a ministerial working group looking at further reforms to the non-domestic rating system. We've also got changes on the electoral registration front. So I think the board needs to be aware of the considerable change that is ongoing. And I think we will aim always to try and meet the targets, but I think I need to manage expectations going forwards in terms of what we will do. We will work our best to achieve them, but I can't guarantee always that we will achieve the targets going forwards. But as I said, Anne covered it effectively, but I just wanted to add my voice to that.
Okay, thanks very much for that, Peter. Any further comments from members, or can we agree the report?
Agreed.
Okay, that's fine. That takes us on to item 10, Evaluation Appeals Progress Report. Anne, are you taking this one as well?
Yes, thanks. Yeah, so this is our appeals report, and the assessor has carried out a revaluation of all non-domestic property with effect from 1st of April 2023, and now will be required to do revaluations every 3 years, as we've said. The revaluation is also coincided with the introduction of a completely new proposals and appeals system, which we're working through at the moment and trying to become familiar with and adapt to. A small number of appeals against the entries in the 2005 and 2010 valuation roll remain outstanding. These were referred by the local valuation appeal panels to the Lands Tribunal for Scotland, and work continues towards disposal of these appeals. Appeals based on material change in circumstances can be made at any time whilst the roll is in force, and after 6 months thereafter. The effect of the COVID pandemic has been cited as a material change in circumstance affecting value on many appeals received since March 2020. Excuse me, I'll just try and close that noise off. The Scottish Government introduced legislation which requires the assessor to expressly ignore COVID as an MCC when assessing values post 2nd of April 2020. This has assisted with the disposal of these appeals. The assessor is also required to maintain the valuation roll, which includes the addition of new entries and amendments to existing entries to reflect several circumstances, including physical changes to properties. These changes, together with changes to properties, tenants or proprietors, tenants or occupiers, may also result in appeals being lodged by relevant parties. The assessor is required to maintain the council tax list and valuation council tax valuation list by amending the list to reflect new, altered and demolished properties. Additionally, he must dispose of any proposals which are made against any entry. Section 2 of the report 2023 revaluation, the introduction of the new proposals and appeal regulations brought in response to the Barclay review of non-domestic rates in Scotland has been introduced. The closing date for proposals to be made against 2023 revaluation figures is 31st of July this year. The Non-Domestic Rates Scotland Act created a new proposal and appeal system whereby owners, tenants or occupiers must first lodge a proposal with the assessor if they disagree with the valuation of the property. This will be a precursor to lodging an appeal with the Scottish Courts and Tribunal Service if resolution can't be reached between the parties. The new system is intended to improve information sharing between parties early in the process without requiring the involvement of the Scottish Courts and Tribunal Service, in an attempt to reduce overall appeal volume and ensure greater transparency and fairness in line with the Barclay recommendations. The resource implications of the new system have yet to be determined, as the final number of proposals will not be known until the 31st of July. At the time of writing, 57 proposals have been received, mostly from unrepresented ratepayers. Since the report was completed, the proposals have gone up quite a bit, and they're now sitting at 188, and we're expecting them to that to continue and improve and increase quite exponentially up until the 31st of July. Coinciding with the revaluation 2023, the function of the local valuation appeal panels have been transferred to local taxation. Chamber of the Scottish Courts and Tribunal Service from 1st of April 2023. Technically, valuation panels will exist until 1st of October to deal with some outstanding matters under the old system. This will also have an impact on the assessor's workload in terms of scheduling and dealing with proposals and appeals. Section 3 of the report reports on the 2017 revaluation appeal progress, and you'll see that from a total of 4,575, most of these have been dealt with. The majority of the 2017 revaluations appeals still to be dealt with have been referred to the Lands Tribunal for Scotland. We have 2 appeals which have been appealed to the Lands Valuation Appeal Court, and we await stated cases in both cases. There is no statutory disposal timetable for these now to be dealt with, although efforts will continue to try and resolve these. Section 4 talks about refers to our 2017 running roll appeals, and that refers to appeals that have been received by new proprietors, tenants, or occupiers of the valuation roll entries. We have since the 2017 valuation roll came into force, there have been a total of 6,956 changes to valuation roll, and this has resulted in 866 appeals. New proprietor, tenants and occupiers appeals have resulted in 340 appeals. Appeals may also be lodged on the grounds that the appellant considers that there has been an error, and there's been 149 appeals lodged of that type. A further right of appeal exists that on the basis of a material change of circumstances, and there have been 7,024 such appeals lodged since 1st of April 2017, with 5,948 of these being because of the COVID-19 pandemic. Considerable progress has been made with the disposal of the COVID MCC appeals, with 4,063 disposed of in the last year. The Scottish Government laid an order before the Scottish Parliament which extended the deadline for disposal of all appeals lodged between 1st of January 2020 and 31st March 2021, mainly to cover the COVID appeals, and that was later extended again to 31st of December 2024 for the first tier tribunal. And 4.6 gives you a summary of the above in a table. There are some appeals still outstanding, which are generally complex, highly technical appeals, which are from the previous rolls 2005 and 2010, and they are listed in section 5.2. And we're hoping that due to progress elsewhere, there'll be some movement in the settlement of these in the next financial year. Section 6 talks about the council tax proposals and appeals. And there, in the financial year to 31st of March, there were 849 new entries made to the council tax list, and council tax payers have a right to lodge a proposal. Table 6.4 is a summary of the council tax proposals over recent years, and you'll be able to see that there. In the year 31st of March 2023, 133 proposals were made and 108 were dealt with by the valuation teams. And in section 7, it's just I'm asking the Valuation Joint Board to consider and comment on the appeal workload and the progressive disposal of council tax proposals and appeals. Thank you.
Thanks, Anne. Thanks for the report again. Just a general point. There seems to be a general increase in the level of appeals. I mean, going back to the 2017 revaluation, there was a 17% increase in appeals there alone, and it seems to be a trend that's continuing. How do you see that working out in the future? Do we have enough resources to deal with that?
Well, it's quite an interesting question that we are now obviously in the new proposals and appeals systems that commenced on the 1st of April, and there have been at the moment, I think I mentioned 180 appeals to date, 188 appeals proposals to date. We will get out of the habit of saying appeals. And the new system means that the the taxpayer lodges a proposal first with the assessor, and then if they disagree with what they assess of the negotiations, how they're concluded with the assessor, they have a right of appeal, not with the assessor now, but with the First Tier Tribunal for Scotland, which is a separate body, part of the Scottish Courts Service. So, so far, I think it's fair to say that we've received far less appeals than proposals than we normally have. So it's going to be interesting the next month, because they all have to be in by the 31st of July to see the numbers we do get, because at the moment we've got 188, whereas by the end of the deadline in 2017 we had over 4,500. So there feels like quite a long way to go to, but the new system is about simplifying the process. It's about making sure people are very serious at the start. They have to put all their information up front, as opposed to before they would have to provide their information later in the process. So it's unknown how the proposals will go going forward. So yeah, I don't know if I'm quite.
No,
does that answer
fine.
your question?
I think Peter's wanting to come in as well, so I'll bring Peter in as well.
Well, and again, captured it neatly. We've moved to a new system. The Barclay reform was the idea behind it was to cut down on speculative appeals, where appeals were just lodged with no basis. And then if you can look at the back, a lot of the appeals from the 2017 reval ended up being withdrawn. So the idea is that you just get down to proposals being lodged where there really is a challenge against the valuation role. What we don't know is whether that makes more or less work, because obviously there's a degree of admin on adding an appeal and withdrawing appeal, but if there's no real substantive thing to it, there could be not much work associated with that compared to dealing with a substantive proposal. So I think there's a question of watch this space as to what the actual workload will be and whether the board has got sufficient resources or not going forwards. I think Anne's perfectly right. We'll only know once we really get into this.
Okay, thanks for that, Peter. Any questions or comments from members? Agree the report?
Agreed.
Okay, thanks for that. Takes us on to item 11, risk assessment report. Peter, you taking this one?
We'll do if I can get my mouse to go in the right place for me and unmute me. Yes, the report is really the risk management strategy is reviewed every year and approved by the board every year. I'm not recommending any changes. I've reviewed the document myself and don't feel there are any changes appropriate, other than to note that the board has reviewed it on an annual basis. But obviously it is up for elected members if they feel there should be changes to the strategy. But I'm happy with the strategy document as it works. What I would like to focus on probably more is the main risks facing the board, and I think they really break down into 3 areas. I haven't reported all risks to the board. You don't see the full risk register because there can be some quite low level risks, and it would be an extremely complex document. And when we in the past we brought the full risk register to the board felt it was overly too much information. Actually, it would rather focus on the significant risks facing the board. For me, the most significant risk facing the board is cybersecurity. And all the conferences, all the briefings I attend, you are advised it's not a question if you have a cyber attack, it's a question of when you have cyber attack. And you can see major organisations are affected by cyber incidents. And I don't propose in a public meeting to go into detailed arrangements around the board cybersecurity. There is a private section towards the end of the meeting, and I'm happy to take any questions there. But the board keeps this position under review. We undertake the Cyber Essentials criteria. We also follow National Cybersecurity and Cyber Resilience Scotland advice on matters, and we're linked into notifications of incidents. But it still remains, however much activity, the risk is high. There is a risk an employee clicks on something they shouldn't do. There is a risk that software is compromised in some ways. So I think that this risk sits there. I think the board needs to be alert to it. It may mean that we need to put additional financial resource or other resource into cybersecurity going forwards. That's something we keep under review. And I'm very pleased to see that external audit will be looking at cybersecurity. It is always good to have a critical friend look at it, and I'd rather, you know, if there were issues and they were identified, that we've got a chance to rectify them rather than wait until something actually happens. So I'm pleased to see external audit taking this particular issue forwards. The other issue is around staff recruitment and retention. Things have slowed slightly, but there is this issue about ensuring that we have the correctly qualified staff for the work of the board. And as I said, we do struggle to recruit at valuer level, and we have got, in theory, we should have 6 valuers, qualified valuers in the establishment. We've got 1 with 5 trainees. So our senior valuers and principals valuers above that, but a valuer grade, it is quite difficult to recruit. And I think the board should be aware of the risks that brings. So although there are some financial savings, we haven't got what we would think would be the resource we need necessarily to deliver everything to target. The final one, again, picked up by external audit and mentioned in the board report, is financial sustainability. The fiscal framework for local government is incredibly tight, and there are significant changes for us. It is unclear what will happen to Berkeley funding from the Scottish Government beyond financial year 24-25, and therefore we need to keep that under review, and the external auditor is perfectly correct to pick up that as an item that we need to keep under attention. So I think those are the 3 main risks. I'm happy for the board, if they feel there's a risk I've missed that should be added to the risk register, I'm more than happy to do that, and I'm happy to take any questions on what I presented.
Okay, thanks for that, Peter. Paul, you have a question or comment?
A comment, really. I think it doesn't matter how much it costs to protect us from cyber attack. It's going to be an awful lot cheaper than solving the problem after we've been attacked. So I think we should invest as much as is needed rather than be budget constrained to protect ourselves against what is a growing threat.
I think you've maybe already answered that question, Peter. I think it's an ongoing thing that we're constantly monitoring.
Yeah, so I think Councillor Henker, it makes a very good point that we do have to keep the resource under review, because the cost of a cyber, if we were to be subject to a major ransomware attack or anything, the cost of rectification could be significant, and we could look back and think, I wish we'd spent the extra money to try and prevent it rather than the costs involved. Equally, as I mentioned in my other report, there is the financial constraints of local government and in which we need to operate, and that's something I think I will work with the Treasurer on, as to trying to make sure the board's budget is well balanced and sustainable.
Thank you.
Okay, thanks, Paul. Peter, just a question for myself in relation to recruitment. Obviously, we've discussed this quite a lot in the past, and it's not just an issue for us. There's been a national issue about recruitment. As far as our own position's concerned, the salary scales are an issue. I don't believe that they've been addressed, and I think that's part of the problem. I think that's why we can't attract maybe as many qualified staff as we want or need. Could you comment on the salary scales again?
The salary scales are linked to single status. So within the board single status scheme, the roles and responsibilities are linked, and that determines the salary grading. So the board has to work within that single status framework. On the whole, we are relatively competitive with other assessors. We're not wildly out. Where you lose out is with the private sector, which can pay more. Equally, the private sector does not offer such good pension benefits, and there is perhaps slightly less job security. But I think, you know, there's also been a lot of promotional opportunities around Scotland, and I think people have moved, but it's something we need to keep under review. But equally, I'm afraid we have to work within the single status agreement.
Okay, thanks for the explanation there, Peter. And if I can maybe just remind members, if you have any particular questions regarding the cyber security element, if you could do it under the pink paper, which is in private, we can deal with any questions in relation to that there. Can we agree the report? Agreed. Okay. That takes us on to item 12, report on the award of the fit-out contract for the new office accommodation. Peter?
Yes, this is a report as a result of contract standing orders. Contracts over the value of 250,000 have to be approved by the Valuation Joint Board. Below 50,000, I can make the award myself as long as a process has been followed. Add the value of 113,000, I had to seek clerk approval, and contract standing orders required that I then report to the Valuation Joint Board, so the board are aware that the contract has been awarded and the value of the contract, which is done here. Hardy's Trust Surveyors handled the tender on behalf of the board. They received 3 responses, and the best value financially was Insular Scotland at 113,800, I think, £95, and the contract was awarded to Insular. I'm pleased to say that fit-out works are very nearing completion. The internal glazing, which was the last thing we're waiting on, arrived yesterday, so I'm hoping it's being fitted today, and that we should be able to start moving furniture into position during the course of the next week or so. So happy to take any questions.
Okay, thanks for that, Peter. The figure that's mentioned, 113,895, there was a question whether that included VAT.
Apology, it excludes VAT. It's exclusive of VAT.
It's exclusive of VAT. And the tender that was received and agreed, was that the lowest out of the 3? That
was the lowest. There were 2 other tenders that were in excess of 160,000. So there was a significant difference, and Hardy's evaluated the tenders to make sure that they were correct and comparable, and Insular won on price, but also delivered on what we needed.
Okay, thanks, Peter. Any questions or comments from members? No, there's nobody indicating. We agree the report?
Agreed.
Okay, thank you. Item 13 is exclusion of the public. We're not live streaming, so Brian, that will not be an issue.
Once we've agreed it, I need to stop the recording because the recording will get posted online. So if we can formally agree to exclude the public, I'll stop the recording. You'll see the light going off at the top of your screen, and then we can carry on.
Can we agree that?
Agreed.
No, that's agreed, Brian.
Okay, so give it a second till the light goes off.